Turning to business news now with Giles Beckford. Economic growth numbers out today. Hi, Giles, our business editor. What can you tell us about the numbers?
Good evening to you, John. Well, they were in line with expectations, 0.8% for the 3 months ended June, an annual rate steady at 2.5%. The descriptions we've heard today from the various analysts include solid, middling, creditable, a bit lumpy, not too bad. Well, not too enthusiastic, really. So a mixed view. Generally, it's regarded as probably as good as we're going to see in the current cycle. People had expected probably a little bit better, given that we've had a strong rebound in exports, and that showed through with dairy prices, of course. Forestry was another strong performer there. And we have to say that we should be thanking the fans who came out from Britain for the Lions tour. They've spent up freely in the bars and the hotels and the restaurants. And also the World Masters Games, they gave a real boost to local consumption as well. So those three elements were sort of the mainstay of it. One of the, perhaps a slight surprise is that construction, which we keep hearing so much about, was for a second quarter, it was a drag on the economy. It actually contracted. And that's probably a sign not of a fall off in demand, but a fall off in supply. Those blockages that we keep hearing about, can't find the right people for the jobs, we can't get the goods or the materials as we need them, we can't get approval or finance, the project gets delayed for one reason or another. They're all showing through. So all in all, it wasn't too bad a figure. Put that together, though, with the immigration numbers that came out today, and they look like that they've probably topped. There was a slight fall off in the number of new migrants, a slight fall also in tourism numbers, and that's been quite a strong quite a strong driver of domestic activity. So if that's starting to soften up and we're seeing a few headwinds in the economy overall, you have to say that perhaps 2.5% or thereabouts is as good as it's going to be for this cycle.
Giles, what will the Reserve Bank make of what you have just described? What does it tell them about their settings?
It basically says to them that their thinking is, by and large, been confirmed. This is an economy that's ticking over, but it's not going gangbusters. It's not an economy that probably wants higher interest rates. There's no sign really of inflation. Productivity, we saw in these numbers, in the GDP numbers, that was on the soft side as well. So the Reserve Bank, as we've been hearing from them all year, will sit on its hands and says there's no need for us to put up interest rates. They're meeting again next week. They have their latest review. Expectations are that the Reserve Bank will be keeping its cash rate steady, 1.75%, and that will probably go certainly well into next year and quite possibly for a year or two after that.
Wow, thanks, Giles. What happened on the markets today?
A soft day for the share market. The top 50 index down 24 points to close at 7795, and the New Zealand dollar just gave back some of its gains from yesterday in the face of a stronger US dollar, we should say. 73.2 US cents and 91.5 Australian.
Giles Beckford, our business editor. Thank you.